All right, so it's time to introduce you to what I believe is the most powerful indicator in Forex trading, and that is the currency strength meter, which has been specially designed, proprietary software for my students. In fact, after I introduced this some time ago, my students have reported very, very high win rates because of the currency strength meter. So again, it doesn't matter which strategy you're trading, and again, in this basic Forex trading course, you'll be learning the bull flag surfing strategy as well as the trend rider strategy, and they both very much depend on the currency strength meter for very, very high probability of wins. All right, so all you got to do is you have to get yourself onto this Telegram alert group, which you can send an email to support@piranhaprofits.com. Send us an email so that we can put you into this group. So this is the group, which is the Piranha Profits currency strength meter, or we call it CSM alerts, right? So every 2 minutes you will get an updated alert on the currency strength of the market, right? So let me just show you this. Right now it's 3:43 p.m. You can see that the last alert was 3:42. So every 2 minutes it will give you an update. So this is what the currency strength meter looks like, okay? And it will tell you which are the strong currencies and which are the weak currencies relative to the other currencies, right? So notice that all the currencies are given a value of strength. So when a currency has a value of 60 and above, it is a strong currency and it's coded in green. So you can see the ones in green are above 60 and they're the strong currencies. At the same time, the currencies that are below 40 in value, they are colored in red, and these are the weak currencies. All right, so you can see in red, these are the weak currencies and weak currencies over here. And the ones in yellow would be, neither strong nor weak. They are kind of like in between. So ideally, when we want to take a trade, we want to always trade the green against the red currencies. Okay, we always want to be buying the strong currencies, at the same time selling the weak currencies. So when you do that concurrently, it gives you the highest probability of the trade moving in your favor. All right. Now you can see that on different time frames, currencies are strong and currencies are weak on different time frames. But sometimes a currency could be strong on all time frames. Then you know it's a really strong currency. Similarly, it could be weak on multiple time frames. So which time frame do we look at? Well, it depends on which time frame you're trading on, and my strategy works on any time frame. Okay, I usually like to start off by looking at the 4-hour time frame. So let me give you an example. So if you look at the 4-hour time frame, H4 over here, you can see that on H4, which are the strong currencies? Australian is strong, right? And New Zealand is strong as well. So we want to be obviously buying the Australian dollar and buying the New Zealand dollar. Now, which are the weak currencies? So weak currencies would be, on H4, weak would be Canadian is weak and yen is weak. All right. So based on this, I could do a few things. I could look to buy the Australian dollar, right, and sell the Canadian dollar. So I'm going to look at Aussie CAD. So I'll be looking at this pair, and I'll be looking to go long on Aussie CAD, because if I go long on Aussie CAD, basically I'm buying Aussie and I'm selling Canadian, right? Buying the strong, selling the weak. That gives us the strongest probability of success. So this is a pair I could be watching to wait for a trade setup based on the strategy, okay? At the same time, I could also be buying the Aussie and selling the yen, right? So I could look at Aussie yen. Aussie yen. And again, I'll be potentially going long on the Aussie yen if I see a trade setup based on the strategy you're going to learn in lesson 5 and so on and so forth, okay? Now, what else could I do? Now, I could also buy New Zealand and sell Canadian, right? New Zealand CAD. So New Zealand CAD. Again, I could go long on New Zealand CAD, right? And the other combination would be New Zealand yen, right? So notice that from the currency strength meter, what am I doing? I'm looking at all the potential pairs that I'll be watching. I'll be watching these pairs because these pairs are in alignment. All right. It's pairing the strong with the weak. So what I then do is I will then look at the charts of these four pairs, looking for a trade setup, a bull flag surfing setup, or a trend rider trading setup, which you're going to learn again in the coming lessons on the specific strategies. All right. So in other words, on any given day, I always start by looking at the CSM. Again, the CSM does change, so you have to watch it constantly, right? Well, not constantly, but every few minutes, take a look at it. And from the CSM, I then know what are the pairs to watch for, right? Because these pairs are going to be the strongest buying versus the weakest selling. Okay, so it makes sense to look at these pairs. Now, let me ask you a question. Would it make sense to want to trade the Aussie New Zealand pair, right? To trade Aussie New Zealand? No, it won't make sense, right? Because the Australian dollar is strong and New Zealand is strong. So they are both strong currencies, right? So if they're both strong, whether I go long on Aussie New Zealand or I short on Aussie New Zealand, it's not going to go clearly in one direction because I'm buying a strong currency and selling a strong currency. They're both strong, so they're both fighting with each other. Make sense? Okay. At the same time, it won't make sense for me to trade the Canadian yen because both Canadian dollar and yen are both weak. So whether I buy one and sell the other or sell one by the other, they are both weak. They're both not going anywhere, right? So you always want to pair a strong with a weak. That's the most important thing. All right. Now, notice I'm looking at the H4 time frame where I see these pairs, right? But the actual trade is executed on the lower time frame. So what's lower than H4? The answer is the H1 time frame. So on H1, I look for a trade setup based on the candlestick patterns, based on the trend. Make sense? Okay. Now, you also learn later on that I could also look at the H1 time frame to look at the strong and the weak currencies and look at the pairs to focus on and execute on the M15 time frame. All right. So let me repeat. When I look at the currency strength meter, I'm looking for pairs with a strong and a weak currency. But then I look at a lower time frame to execute the trade based on the strategy. Okay. So in this case, I'm looking at H4 and I'm looking at these four pairs. So what do I do next? The next thing I'll do is I will then look at the charts for these four pairs, looking for a trade setup if the trade setup appears. So I'm going to open my charts right now. Okay. So what I could do is I'm going to look at Aussie CAD. Let me delete the rest. So I'm going to look at Aussie CAD. All right, Aussie CAD. I'm going to look at Aussie Yen. I'm going to look at New Zealand CAD and New Zealand Yen, all right? All right, so right now I'm just looking at four pairs, which is the New Zealand Yen over here. And again, I'm looking at the New Zealand CAD and Aussie Yen and Aussie CAD. There you go, right? So notice that I'm actually looking on the H1 time frame, because I told you, right, on the CSM, the strength meter, if I'm looking at H4, I drill down to the lower time frame, which is H1, to look at the charts to look for a trade setup. But on the CSM, if I'm looking at H1 and I identify the pairs, I then look at a lower time frame M15 to look at the charts. So now I'm looking at the H1 charts. So you can see that based on the H1 charts, sure enough, you can see that all four are on a uptrend, right? You can see it's an uptrend right here. That's Aussie CAD. I'm looking for a trade setup, all right? So waiting for it to retrace for a bullish candlestick pattern to enter the trade, which you're going to learn in lesson 5 very shortly, right? So again, Aussie yen. You can see Aussie yen is a very nice trend over here. You can see every time it retraces there, you could buy at a bullish reversal pattern, take the trade up, comes back down, buy again, take the trade up. So you keep trading it, you keep buying. When you see it retraces with a bullish candlestick pattern, you buy, you take profit, come back down again, bullish candlestick pattern, you buy, take profit, and you keep repeating the process again and again, right? So we identify, first of all, from the currency strength meter, and we zero down to the charts to look for the trade setup. Again, New Zealand, Canadian, you can see also it's on an uptrend right here, and it just broke above a level of resistance, right? New Zealand yen, you can also see it's a very nice uptrend because New Zealand is strong, yen is weak. So you pair a strong and a weak, you get a very clear trend. You can see it's retracing to the 50, right? Retracing to the 50, could bounce off the 50 for potential buy before it goes back up again, right? So again, these are all the different strategies you're going to learn very shortly in both the basic and the advanced course. But for now, understand how we use the currency strength meter to identify weak currencies, strong currencies, pair them together, and so we know which are the pairs to focus on. Then we go down to a lower time frame to look for the trade setup. So with that, let's move on to the next lesson.